Every day, thousands of videos are uploaded onto the internet talking about how you can minimize your taxes, how you can pay the least amount of tax, how you can totally avoid paying taxes altogether. As entrepreneurs, we often do not get to see what happens on the other side of these myths. As tax practitioners, we actually get to see this on a weekly basis, cases where people are fined 40 million rand, people have taxes that they owe and they need to pay 17 million rand. For some of these people, they end up having to close down their businesses. In this video, I'm going to try and help you understand some of the common tax myths that are out there and help you move forward with confidence so you can handle your business and tackle your tax liabilities. Let's get started. This is the most dangerous and pervasive myth out there. The idea that you can simply fly under the radar because you're a solopreneur or a small business and you don't need to pay your taxes. It's simply not true. Our tax laws and SARS expects you to pay your taxes. You are obligated to pay your taxes regardless of how small your business is. As an entrepreneur, it's on you to make sure that you have the right information about your business so that you can compile and file the correct taxes. There are lots of avenues for you to minimize your taxes, even in some cases to not pay any taxes at all, but it is your responsibility to file and declare that you don't have any taxes due. It's important that you understand that taking care of your responsibilities early on as an entrepreneur will help you build the skill of running a sustainable business. For a lot of cases that we see, people get caught up in their 10th year of business when they're now making a lot of money, but they've been operating under this assumption that they can just fly under the radar. It's simply not true. At some point, it will catch up with you. And as you know, with Project Ama Billions, SARS is cracking down on these businesses that are non-compliant. The updated Tax Administration Act and other laws can have you put into prison for not filing your taxes. Remember, filing incorrectly, not filing on time, not paying on time, not having your information up to date, all of these are now offenses that can lead you to be put into prison. You can actually land in prison if you don't file your taxes. Instead of seeing your taxes as a burden, think of it as an opportunity for tax planning. Why is this important? It's important that you understand if your business is actually cash flow positive. If you're not paying your taxes, you may be running a business that is not profitable from a tax perspective. After paying your taxes, your business is not profitable, and you won't know this until you start actually filing your taxes. So filing your taxes and compiling that information is going to help you to understand your business better. You can use that as an opportunity to help you grow as a business owner. We all love our accountants, don't we? As an accountant, I often have early stage entrepreneurs sign on for services with us. And one of the things that you hear is people are just so happy to have somebody else take care of it. One of the things that we pride ourselves in is making sure we educate our clients to make sure they understand their taxes, how the compliance landscape operates, and how they can remain compliant. But as an entrepreneur, you need to make sure you know your taxes, you know what's going on. It's a huge gamble to leave it to your accountant, no matter how good they are. As an accountant or as a tax practitioner, we operate under the assumptions that you give us. We are using the information that we assess based on what you're telling us and what we see in your business. But there might be areas that if you don't ask the questions and get the right information, there might be some mistakes that are made. Accountants and tax practitioners are humans too, so some errors can happen. So it's very important that you ask questions, you make sure that you understand what's going on. You don't have to actually do the work, but you just have to understand what's going on, what's supposed to happen, what your numbers are supposed to look like. The more you ask questions, the better equipped you'll become to understand financial statements and all the paperwork in your business. You will become better as an entrepreneur in understanding how things actually work, not just in your business, but in any business. You'll need to have a relationship with your accountants and tax practitioners as financial partners, where you are working hand in hand together and you're not just a passive observer. If only this was true. This may used to be true in the past, but in this digital age, it's becoming less and less true. SARS has a number of ways that they are equipping themselves to get an understanding of what's going on. They can actually do lifestyle audits based on deeds office records, vehicle registration records, bank transactions, and even your social media. So with all this information, they can compile a profile of what your business or your personal finances should look like and compare it to what has been declared or not declared. So the myth that because I'm transacting in cash, I'm not going to be caught, at some point you're going to have a transaction that's going to be flagged. And if you're only transacting in cash and you get flagged with SARS, they will start to investigate you. You may have heard of high-profile cases where SARS looked at social media and flagged certain people and started investigating and went after these people. The risks of using cash and having undeclared cash transactions are huge. Not just high administrative penalties, but also criminal penalties. You can land in prison if you're doing cash. Remember, there's two elements that are happening as we speak. There's Project Billions, where SARS is equipping itself with more manpower and more AI-driven solutions in order to track all of this information down. They're not just looking into bank records, deeds offices, and vehicle registrations. They're also having information sharing services with local and international bodies. So they're collecting a whole host of information on you and your business, and you'll be able to be tracked. If you purchase a vehicle, if a relative of yours or your spouse has high purchases in certain areas, you'll be able to be tracked. Secondly, we have the grey listing of South Africa, which led to the FIC setting up a whole host of rules where beneficial ownership or beneficial information is being compiled. What this basically means is if you are to rent an apartment, they're going to compile who is the ultimate beneficial owner here. So this information is being tracked as we speak. And as SARS equips itself even more, they'll be able to even see these records. So operating in cash is becoming more and more difficult to fly under the radar. It's better to move to the digital age and make sure that you start declaring your taxes and paying what you need to pay. So many entrepreneurs rush to register a company because they watched a video where a lady said that if you have a LLC or a PTY, you'll be able to minimize your taxes. Registered businesses do have advantages, but those advantages are going to depend heavily on your specific circumstances and your specific business. Remember, you're still going to earn a salary, which will need to be taxed. Your business itself will have taxes it needs to pay, VAT, income tax, and others. So you need to evaluate your circumstances and see whether registering a business is going to be beneficial from a tax perspective. In most cases, it is true that you get more options with a business, but it's not always true. It's very important that you understand your circumstances, how they relate to the taxes, and what your options are. So what must you do? Before you rush to register a business, make sure that you consult with a professional. Speak to an accountant, speak to a tax practitioner, speak to a tax lawyer, and understand what your options are and what's the best option for you. Don't make generic assumptions that may not apply to your business and your circumstances. Not all expenses are created equal for SARS. While most expenses are deductible, SARS has very specific criteria for deductible expenses. The expense needs to be wholly or mostly used for business. If there's a personal element to it, that expense is not deductible. You also need to make sure that you have accurate records in terms of receipts, invoices, and business documents that justify that expense. One expense can be deductible in one business, but not deductible in another business. So it's important for you to understand the distinction between a legitimate business expense and your personal expenses, what you feel is deductible from SARS. Being overly aggressive or claiming personal expenses can lead to audits by SARS. If you're audited and expenses are disallowed, you will incur hefty penalties and interest. So it's important for you to compile all the records, understand what's deductible and not deductible in your business. When in doubt, consult. All right, so how do we deal with these myths? Stay up to date with the tax laws. Tax laws have been updated recently, and based on those updates, small offenses such as not filing your taxes on time, having incorrect information, not updating your personal information are now criminal offenses. You need to understand the tax landscape for your business. There are lots of deductions, allowances, and tax relief measures that SARS offers that are available to you that will help you pay the least amount of tax. It's important to shift your mindset from I don't want to pay any tax to I want to pay the exact amount of tax that I need to pay and not a rand more. You need to make sure that you keep accurate records of your business. Invoices that you send out to your clients, invoices you receive from your suppliers, decisions that you make need to be documented through board resolutions and board minutes. These board resolutions and board minutes may be the reason that an expense is justified. And without these documents, an expense may not be deductible. You need to make sure that you consult before you make decisions. You need to be actively involved in understanding your business and being actively involved in the decisions that are made for your business. Remember, managing and understanding your tax obligations is not just about avoiding penalties. It's about building a robust, compliant, sustainable business. It's about you developing your skills as an entrepreneur. I hope you enjoyed that video. If you did, please like the video and subscribe to the channel so other entrepreneurs and business owners just like you can find this content. I'll see you guys on the next one.